Hi everybody, welcome to Talking Automotive with Mark and John. My name is Ky Sinclair and my co-host Mark Padavestra.
Hi John, today we've got Brett Stevenson from Skyfii. Brett's the Director of Business Consulting and shares with us some very powerful insights with the tools that Skyfii have via their Blix business, using data to measure the efficiency of your lower sales funnel, of walk-in traffic, passing traffic, dwell time, and really focusing on how you can improve your conversion and profit metrics.
Talking Automotive, analysis, identification, implementation of profit opportunities for the automotive ecosystem. Let's get into it.
With 30 years' experience in auto logistics and state-of-the-art locations in 5 major Australian cities, Precar Fleet Services is an independent division of Precar Services, offering specialty fleet fit-outs for commercial applications ranging from simple tray and tow bar fitments to fully bespoke service body and accessory installation. With quality-assured safety, compliance and standardisation of vehicle builds, Precar Fleet Services are a premier all-in-one solutions provider for commercial vehicle fleet operators, leasing companies, and original equipment manufacturers. For further information on how Precar Fleet Services can assist in solving your commercial vehicle fit-out needs, please visit precar.com.au and click on the link to Fleet Services.
Today, we've got a fascinating speaker who's going to share some incredible insights with the physical journey through dealer showrooms and retail in general. Brett Stevenson, the Director of Business Consulting at Skyfii and formerly Blix, joins us. Welcome, Brett.
Thanks, Mark and John. Nice to be here.
Yeah, Brett, also from my side, great to have you on the show. Maybe just to kick things off, can you just tell us a bit about Skyfii and what type of services you provide?
Sure. So Skyfii is a data intelligence company that looks to take in multiple sources of data and then from that can give out various insights, really driving on customer behaviour. And as a business, they're really hardware agnostic. So they look to actually import data from any form of different hardware that a client might have or sources they might have to really give insights that are driven around this customers. And really, it's all about helping customers answer those business goals they're looking for from using different data sets. But it's a global company across multiple countries, and they're really heavy in automotive as well, as we're going to talk today, obviously. Retail, both standard retailers, but also the shopping centres, very large in transit, so through the transport agencies and airports, and then through stadiums and really any other area where customers may move around and visit.
So Brett, where are you based out of? Which country are you based out of?
The head office is based out of Sydney. In there's also support offices in Melbourne, but then we also have offices and support agencies right throughout Asia, Middle East, America, Canada, South Africa, South America, you name it. There's representations all over the world.
And so did Skyfii start in Australia?
Yes, Skyfii is an Australian company, publicly listed company, and really was brought off the need, as we said, to look at all the different data sources to try and answer these. And there's so many different big data type comments around at the moment and different sources that it's important to have a company come together to pull these together to answer some business outcomes.
And as far as how long has the business been around for?
The business has been around for about 8 or 9 years, and doing very, very well and growing very, very fast.
And I'm keen to just drill down because our introductions were with your specific part of the business, which is Blix. So can you tell us a bit more about Blix?
Sure. Blix was recently acquired by Skyfii and sort of fits in nicely. Another data source, really coming through to look at that differently. And what Blix is really designed to do is measure customer experience and customer engagement. So we're really interested to know, how many people have then entered into a location, what levels of engagement they've had, and then what outcomes we've sort of seen on the other side. The really nice part about Blix is that it doesn't require any heavy IT infrastructure or lifting. So it's really nice and short and sharp and can give some insights immediately.
Who are your target customers?
So from a Blix perspective, the target customer is really anybody, any environment or any venue or location where people generally need to visit to look for a good, where they're spending a reasonable amount of time. And what we always try and look for is where somebody needs some form of engagement with a staff member. Okay, so traditionally, Blix as a standalone product is not really for, say, a supermarket. Skyfii as a business certainly is, and they run that through those. But from a Blix specific one, we're looking more for where we're engaging with a staff member and conversion is not given. We need some interaction to be able to convert that client.
So, Brett, how does the data get collected and how do clients access that?
The way Blix works is what we're actually measuring is we're measuring smart devices moving past, around, and inside a location. Where traditionally along people counting, you need cameras, and the Skyfii business as a whole certainly does people counters through different measurements. For Blix, what we're actually measuring is the smartphones moving around those locations. And primarily, we're looking at the smartphone trying to detect a Wi-Fi connection. Now, what that then does is that device, when it's looking for it, that information or probe that it puts out is unique worldwide. And so it allows us to then be able to see how many people we're getting past a location, how many of those come in a location. But because it's unique, you can start getting an understanding to say they're a repeat customer. They were in our location for X amount of time, or more importantly, and especially in an automotive world, have we moved across the group of dealers or network of dealers that we're looking at?
And as far as the data you collect, is there any personal information and does it contravene any of the privacy laws around collecting data and information?
No, and look, great question, Mark. Certainly one that's always been on the top of our mindset and certainly is moving forward. So as an overarching company, we abide by all the privacy laws, including GDPR in Europe. And generally what it is that probe that comes out from those devices, even though they're unique worldwide, there is no personally identifiable information in them. So, for example, with my device, you can't see what telco I'm with, you can't see the email address, the phone number, none of that. It's just hardware-specific information that comes out, but most importantly, unique worldwide. So if the three of us move around a venue, it will see three different devices and be able to measure them.
So what does the data tell you and support your clients?
So look, there's a couple of big high-level things of what it is. And I might just list a couple of sort of the data points that are there that are interesting, I'm sure we'll discuss. One of the things we measure is because our sensors have such a large range in an automotive environment as well as in a retail one, we actually measure the passing traffic. So we're measuring how much traffic's moving outside the dealership location or outside that retail location. We're then measuring how much of it comes inside the location. Now, because it's unique, we can then determine that, for example, over 50 people that visited us today, 25 of them have been here before. When were they here before? Once those 50 people are in, how long are they staying? How many of them moved too fast? So we didn't get a chance to engage in that road to a sale process or didn't engage in our general training processes. You then also see a cross-shop across the network. So how many different locations I'm moving from. And then as a step back, if you're then looking at a group of locations, group of stores or dealers, either from a big company or a manufacturer or OEM level, you can start then ranking these locations based on any of these metrics. And really important from an OEM or head office's perspective to understand and say, where are we driving that traffic? Who's engaging with them better? Where are the outcomes coming? Maybe my marketing dollars shouldn't have been spent on the same for everybody. We need to spend certain amounts on that section because we get a better response rate based on that interaction there versus some of the others. And then the dealers do exactly the same on their individual showroom with that data as well. With the dealerships, obviously, though, you can delve a little bit deeper into understanding, do I have enough staff on? I wasn't expecting to have that many people through today. Can I find that again? What impact does giving RDOs, rostered days off, to my staff, what impact does that have of engagement of people when they're physically in the showroom? And most importantly, and especially in the current climate, what am I missing out on? If these people are coming into our showroom, I can now quantify how many are coming in, but more importantly, how many are leaving without being able to engage with anyone.
So even those people coming past, is it if someone's driving past the front of the dealership, would it pick up those people, or do they have to be physically walking past the dealership?
Look, a little bit of both. And I mean, the way the phone works is that, you can imagine when I walk home, my phone connects to Brett's Wi-Fi. As I'm sure yours does. When I go to the office, it does the same. Phones will send that probe anywhere from 5 to 60 seconds apart, continue looking. And it's looking, all the time, looking for that connection. So, if I'm driving at 50 kilometres an hour past your showroom, no, I may not probe because depending on the speed of what it is, if I'm walking it more than likely will. But Blix is a trend tool. We're looking to say, what is the increase outside? My traffic outside increased 20, 30%. Did we see that same increase, inside as well? And so that detection rate outside is always the same. And so you're always going to capture roughly the same to measure those trends.
So question for me, and I think that I'm keen to put it in the context as to where this Blix data fits in the overall funnel. Because as an OEM or a marketer or a salesperson, we look at the funnels. There's the UBs, which are the unique browsers. There's the eyeballs, looking at how many people see your outdoor signs or your views on TV. And then we look at the web visits, the web inquiries, etc. This is really getting down to the nitty-gritty of what is the behaviour right at your point of sale in the bottom of the funnel, where people's intentions are being made clear but not necessarily measured effectively, which is I'm either close to your showroom, whether it be a Chanel showroom or a automotive dealership showroom. So on the walk passerby, so I'm seeing, and this gets back to John Watt and Carl Winther talked about in one of our earlier podcasts, which is really managing your assets, sort of owned assets. So this is where I own this dealership or I own this store, and my signage, my display is measuring or you're measuring the people walking past my signage and display. So is it inviting? Are my owned assets helping me get people then to come in across the threshold into my showroom to then measure these other metrics that you talked about, which is the walk by turning into walk in. And then once they're in, what's their dwell time in? Are they walking out without being seen? So if they're bouncing out quickly, and if they've been somewhere else. So has my marketing been effective in getting them to come near my showroom to come in? So am I right in saying that, right, this is a really good tool to hone in on your owned assets and then your sales process?
Yeah, 100%. I like to think of it this way, and sort of the way I've sort of discussed it a few times before is we're a long way down the buying journey, and the buying journey is generally at a very high level, something like this. Many, many years ago, we created a brand. I'm talking about the car companies. We created a brand, and some of them have been around for a very long time and worth billions of dollars, the brand. And then potentially 5-10 years ago, we created a particular vehicle we were going to decide to do. It was the new model, the updated version of, whatever the one we were going to do. And so this is it. The local head office knew it was coming. And so they've prepared a whole marketing plan. It's been done, that's all been designed sometimes years in front, and it's all been decided. A customer has then gone online more times than not, we know now. They've ingested some form of advertising, be it online, billboard, radio, TV, whatever it might be, or they're just a car aficionado, and so they've gone on, they know what's coming, which everybody now does, and so they're ready for it. They've done some research, they've done some investing of some time and some energy into looking at it and saying, fantastic. Sometimes nowadays they even know, I want that color, I want that trim, I want these options, and I almost know what I'm going to pay for it. You sort of know this information. So by the time they then enter into the showroom, not only have they decided on the brand, they've bought into the marketing, they've bought into the product, they've now decided to buy into your dealership because they've chosen yours to walk into. And some of these markets that are heavily saturated, you could go into a lot of other options. We are then measuring that interaction of, okay, you have now decided to enter. And so looking at that journey and saying to what you said, Mark, and also just those processes I've gone through and the steps, when you look at it that way, you understand the value of actually this person deciding to walk into your showroom. And then the Blix tool really measures and says, okay, what are you going to do with that person? What is the behavior or engagement level that is going on with this lead that, when you look back at that journey they've done to walk in, is quite valuable. And especially, in the current climate, a lot of areas, people only want to walk in when they really know what they're doing. They don't want to be around too long. It's a really, really valuable measurement to be able to sort of say, this is what it is. And I think one of the differences that we have is, a lot of dealerships for generations, certainly decades, have sat down and looked and said, okay, we report on a certain level of foot traffic. We know what foot traffic we get. We know what we're getting in, and that's fantastic. But a lot of the times, the general manager or the dealer principal, they may not be in the showroom 24/7. They're not there all the time. They don't, necessarily look at that. And so some of the questions of how busy was the showroom? We were busy, we sold cars, fantastic. But actually looking a bit deeper and saying, well, actually we were a bit busier than I thought. I can see there's a lot more. But how come we're not spending anywhere near as much time with those customers as we did last weekend or yesterday? How can I fix this for tomorrow? Knowing the value of that walking customer now really gives these tools to be able to say, okay, let's engage. And then on the back of that, having a discussion with the team and saying, guys, how can we fix this? It's quite important. One of the main differences that we've seen where, I'm going to give you an example of where this has been used really, really well. And one of the things we try to discuss with a lot of the OEMs and dealers is, we have a dealer principal come to us in Melbourne, and he said, historically, the way we've always managed our sales team and performance managed them was, how many cars have you sold? You've got a target of 5, 10, 50, whatever vehicles it is. You didn't sell your 10 cars, beat them the head over the stick. Why not? They're a bit upset for the next month, because they don't know the numbers until they're into the month. And so potentially that's a 2-month cycle where that guy or girl is not selling. If they're at the 3rd month, they're out the door. So what they've done here is these guys changed and said, let's change the dynamics. Whilst conversion and selling ratios are very important and you never lose them, let's have a look and say, I'm employing qualified salespeople. All right, I've got the training I'm giving to the dealership. The OEM's given me the training that we need. It's been instigated, it's been used. That's fantastic. So knowing that process, let's pivot it and say, can we spend 5 minutes longer with our customers today than we did yesterday? Can we spend 5 minutes longer than we did last week? Can we make sure nobody leaves our showroom in under 5 minutes? This dealership implemented those measurements, and in January of a year, they sold the most amount of cars they have ever sold for 3 years in a row in January, just by focusing on engagement time, understanding that my sales team know what they're doing past that point. So it's changing the mindset and a bit of management change, but the customer's changing. We need to change with it.
Yeah, but Brett, that makes a really good point, because that was one of the big points David Kane brought up when we interviewed him previously. He said when someone comes onto a lot in the US, in their dealerships, the first thing they do, they ask the salesman just to go and talk to the customer and engage. Don't try and sell them anything. Just talk to them about why they're there, what they're looking at, what is their situation, what's the family background. So because once they get to understand that, a time will come when you can then sell the customer. And I think it's basically what you're saying there. By just engaging and having that conversation, it will lead to the sale because the trust is built, everything's built from that. So to me, that's really interesting.
Yeah, and that's right. And look, I think the two main things, and Mark and I have spoken about this for many years through our different dealings, but they're really looking at is that, customers now walking onto a car showroom don't want to be sold, in inverted commas. And as I said, remembering now the value of a customer, they've already looked at this and they've already understood and have a dynamic of, I was thinking of 5 vehicles, I've whittled it down to 2. That's probably the one I want to have a look at. They've really gone through that process, but they don't want to walk in and be sold. They don't want to be pre-qualified. They don't want to be felt like, why was I just brushed off to the brochure stand? Don't they know I'm here? They want to sit down and just have a conversation like a human being and say, hey, this is what I've seen. This is what I'm interested in. Can we have a discussion about it? Sometimes they may not be as forthcoming with that information, but it's really just about engaging and conversing with what they've already looked at, as opposed to, I want to sell you that one on the car because it's got that one on the floor because it's got the biggest bonus attached to it.
The metrics that matter. So when we talked about the walk by, the walk in, the dwell time, the bounce rates, and the cross shopping data, and even the VBACs, which is it? All of those that are the key ones, or do you isolate certain ones to say that one is the one you really need to lift your game with?
Yeah. So what we've tried to do with the product is really allow multiple departments within the business, be it the dealers or the OEMs, to be able to engage across all the metrics, but there are certain metrics that are going to be more pointed for certain departments. So for the marketing ones, we've always found that the passing traffic for marketing versus coming in is fantastic. For example, I ran a marketing campaign. Hey, we saw an increase in traffic. We sold more cars. Fantastic, successful. But what if the traffic outside the dealership increased by 10% on its own? It's not necessarily the marketing campaign. We're just getting our market share as we always have. So a really interesting one for them. Operationally inside the showroom, sure, an increase of your walk-in traffic is always important to have a look at and know, but really what it comes down to is what you're doing with those people. And so it's the dwell time and the missed opportunity are the two main core ones that you really want to engage with and monitor quite closely on a daily basis.
So Brett, do you compare, so if I'm OEM and I've got 10 dealers, do you compare those results across all 10 dealers and then have stats from a OEM level and then from a dealer level to understand the dwell time and how many people came in or what was happening in the market?
Yeah, we actually do both. So if we were to have an OEM or a dealer group or one of the big dealer brands come on board with us, we have two dashboards. And so one is a OEM group type dashboard, and that's really pivoted and set towards a reporting type level. So that will give you weekly data and it will give you monthly data, obviously all those metrics involved. And you can go in and have a look and pull multiple reports to say, I only want to view a national, or I only want to view a group of dealers or an individual dealer, or you can individually select them. So you might say, for example, we know in the current environment that CBD locations are not doing as well as some of the suburban locations because of the business traffic is not there. So you could say, I want to select, my CBD locations only. So you can go in and select that. When you get to a dealership view, then you can look at your dealership individually. Now you also, if you are across multiple dealerships or you are an OEM or a GM of multiple dealerships, that view is also available. You have a drop down and you can select a location and you view them one at a time. The difference with the dealership view is it's last 7 days, last 30 days, and it's live. So I can see what happened an hour ago in my showroom. And so that, whilst the OEM dealer group one is more of a reporting type dashboard, we did this, what was the reaction to what we did? The dealership one is more operational. What did I do yesterday with the people that came in the showroom floor?
And then the second part to that is, do you compare between brands or do you have to get agreement by the brands to allow you to do comparisons? Or do you amalgamate all the competitors in one group and then say, okay, your brand is this, and this is amalgamated brands next to it.
Yeah, John, we do both, to be honest. So one of the interesting parts of what we do, certainly from a Blix product perspective within Skyfii is, it's not just software as a service. It's not there you go, we put a bit of hardware in and off you go. Me and my team engage with the OEMs and engage with them. So, for example, I don't know, Mark's time there, we would go to area manager meetings. We'll go to dealer principal council and co-op meetings. We'll sit down with the dealers where we need to and have a discussion about this and say, this is what's going on. Part of the thing we also then can provide is we provide industry data reports. And that's really important, because if we had a 20% uplift in our traffic last week or last month and we sold more cars and we're all high-fiving each other and feeling great, well, that's fantastic until you see that the rest of the market was up 40%. And then you go, well, hang on, that wasn't bad. Or, whilst you don't want to talk about negatives, if we were down 10% and you're bashing yourself around the head, you look and go, everybody else was down just as much, if not more. So that's just the market. As I segue to that, our OEMs and clients that come on with us do have the option to sign in, and it's opt-out by default, but they can sign into a document to allow to see cross-shopping, cross-brands. And so then you can see who went from not just within a brand who went to these showrooms, it's from brand A to brand B via brand C, and it's by dealer. That's quite an important one to have a look at. But I guess for both of you with your expertise in the industries, it's interesting to know that when we have a look at the cross-shopping from within a brand and multi-brand, it's nowhere near as high as the dealers perceive it to be. It's actually single digits cross-shopping when you have a look at it. So it's that digital footprint we were talking about earlier has really eliminated really what goes on. And some of the questions I've had with dealers will be, oh yes, but ABC Motors cuts it up on the phone and does whatever, and that's fine, but Blix will see them when they go to pick the car up for delivery. So we actually pick the cross-shopping up, and you can expand it out, and it's still single-digit percentage cross-shopping. So it's quite an interesting one.
I always recall when using your product in a previous life and then looking at those numbers and having the dealers that would say, oh, so-and-so down the road is stealing all of my business. They come in here, but then they discount it and they sell the cars. And yet the data never, ever supported that. So it is amazing. There's the perception, and that's the beauty of your product, I feel, and as you know, Brett, I'm a massive fan. It is so powerful, and the correlation between, we used to get daily order right, and the conversion ratios and the sales volumes and the beback number, your system was that efficient, we could overlay it versus the dealer reported stuff. And there's always going to be some variations, but when you've got an entire network reporting the walk-ins, we got to a stage where the correlation, and we looked at a number that 40% of walk-ins would buy a car. And how we saw that was in the B-backs, because they, over a longer period of time, if you looked at over a month or 2 months rolling, you would get close at 38%, because they were the people coming back to take delivery of their cars.
Correct.
So you'd have some B-backs that would go back to buy, but then it sort of washed out. When the data's big enough, you actually saw some pretty effective trends with the information. So yeah, that conversion ratio is good versus others that would be, say, off and think, oh, hang on, the offer's not as strong, therefore we're not getting the people coming back to take delivery of the cars because the system is so good.
It's one of the big things I talk about too, these multi-departments. One of the other things we look at is, that what we call recency and frequency, how many people are returning and over what time frame. And, high-level data, which most people know now, the average number of showrooms visited by someone is 1.9, and that's multi-brand. That's not I'm going within the same brand, that's I'm looking. So you're now at 2 or just under 2 is the average. But what's really interesting is that almost 80% of people do all their car journey, including delivery, within 5 business days. Okay, it's that short. And so, as a salesperson myself, as I'm sure we're all the same, we're really bad at paperwork and CRM. Everybody is. But really, it's about saying, guys, fine, just make sure you follow up these people fast enough. The amount of times I still have conversations with families and friends that say, I was looking to buy a vehicle, I went through the whole process and nobody followed me up. Even in today's world, is still amazing how high it is. And so that return rate where we have the trend and it's a percentage of up and down, I always say to OEMs and some area managers, especially when they're going out to see their dealers, I say, look, if you just want to focus on one thing, how to help them the most, as a bit of a precursor to when things potentially are going to come off the rails, if the amount of people returning is declining, it's got nothing to do with foot traffic, it's a percentage of those that did come in who returned. If that declines, you're in trouble, because it means they're not coming back for a second opportunity and or they haven't purchased the vehicle. And in today's world, people just want good customer experience and customer service. And if I've been treated poorly with something that is obviously, potentially my second highest purchase you're ever going to make after your home, you want to be treated well. And it's a great precursor for a red light for a DP to go, hang on a minute, what went off the rails last week, and fix it before the whole month gets destroyed. So, a really nice one to sort of measure with that engagement level.
It's interesting, Brett. We interviewed Mark Sybil, the sales director from Hankook Tyres, yesterday. And it's a very fascinating podcast about tyres. And he uses and supports and aligns with what you're saying there, and also what David Kane said in the US, that with the digital journey now, and we've become further digitized through COVID, if someone's physically in your showroom or in your workshop and there's a tyre sale or there's a car sale, they're not there to play tiddlywinks.
No, correct.
They've taken their life into their hands by walking into a showroom, and it literally is that. When you think of COVID, it's potentially life or death decision to go physically somewhere to buy something. You're not there to kick tires. You're there to transact, because you've gone to a lot of trouble to get into that showroom. So the conversions should be stronger as an expectation.
Yes. And look, I remember, back when I was working for, luxury brand and going through, we had a gentleman walk in with a pair of shorts on, no T-shirt on, and a pair of headphones, and everyone dispersed and sort of, pre-qualified before it even walked onto the showroom. And so I went over and said hello, and next thing you know, he's buying $250,000 car and saying, here, ring my finance guy, he'll settle the account today. So it's just, because that's the decision. They feel comfortable in what they're doing, and off they go. And in the current environment, the last thing we should be doing is pre-qualifying by a long way.
But even, it's even online is how quick you respond online. And that's also very important, because I think some stats were coming that David mentioned out of the US. If you respond in 5 minutes to someone, showing interest in your brand online, the chance of success is like 292% higher than if you took more than an hour to respond. You might as well not even respond.
That's right.
So it's quite significant. And it's the same thing what you're saying there. And when someone comes into the showroom, it's just following back and talking to the customer and following up once they've left the dealership.
We're all consumers of something daily anyway. And, when you think about it, when you've made a decision that, I'm going to spend my $30,000 in your location, or I'm looking online because I'm going to spend my hard-earned $30,000 on your brand or your model or whatever it is, I think I'm pretty important, because it's a lot of money that I've worked hard to do, and I'm going to do that. And then in a digital world where now we've all been sort of taught that your action is immediate, I should get things back immediately. I send a message, I get it. I'm on social media, I should get some form of interaction immediately. Every time I'm sitting there waiting, wanting to spend my money, I get frustrated. But the physical world, when you go that step further and you physically walk into a showroom and someone, whilst they've got a million things going on, we understand that, to be brushed off or felt like you're not interested, you just think, I'll take my $30,000 somewhere else. Off I go. And so from a dealer, that's obviously something they want to grab. But from an OEM level, even one step back further, they look at the cost per acquisition of what they've spent right back from that brand journey we talked about earlier of creating the brand. The money that's been invested to get someone into that showroom to then not give them the experience is a very heavy cost, to be worn across, that potentially they just go to the next showroom down the road and buy that vehicle.
Now, we've often talked about, and I think this is one of the key powerful elements of the tool that you have for OEMs, but more importantly for dealers or retailers, no matter what the product. And it comes down to the metrics to improve conversion and profit. And you talked about the 5-minute dwell time. We would often discuss measuring that the trend in that dwell time, but is there too much dwell time? Is there also a problem with too much dwell time? And is there a relationship between dwell time and profit?
And look, yes to all of the above. So when we sort of looked and had a look at this quite detailed for quite some time with a whole lot of data sets, we had a look at 11 brands for both new and pre-owned vehicles, and there is a direct correlation to dwell time and gross profit. Okay, now it is not a linear line. Okay, at some stage it's a bell curve and it tips off the other side. I'm a true believer in that the data and inputs and insights it gives you should be something that you reference. We always like to say it's science to your intuition. None of us are going to say we're as good as the dealer that's been on the ground for 30, 40, 50 years as a business and a family. That they know their business, they know the demographic and their market. However, what's interesting to have a look at is to sort of say, as a new salesperson that comes onto the business and I'm working there and ready to go, I know when I started selling cars, it was the same. And I came from a head office background. So I had all the product knowledge without any selling skills. I spent too long with my first customers because I wanted to tell them, let me tell you all the amazing things about this vehicle. And I did the telling and I was there forever. And at the end of it, they didn't have time to do any purchasing because they'd seen so much product and were amazed and it was fantastic that off they went. Problem was the next showroom they went to, they met someone who just said, oh, that's fantastic. Let's talk numbers. I'd done the selling for them in the product. And so that's where you get dwell time too long, where either they haven't bought or we've had to get the sales manager involved because they're going to walk. And the only way to tie them then is to try and cut the price, to try and get them to say, well, it's worthwhile me making the time to have that. On the other side, and we find this a lot when we get to the end of the financial years, when we have these options that are now May and June really, is that we go to market on price, okay? Even though, we sort of say it's not always a, drive away this price, it's generally a rate or it's these inclusions. There is a price assumption under there, or if it's come in and this is the price line, if that's already been discounted, when I walk in, that's what I start negotiating it. So the customer's coming in not because do I decide I want a white car or a silver car? I'm coming in going, well, let's discuss the $39,990 offer you've got advertised as my product offering now, and we start on price. So trying to then induce the road to a sale process then is not going to happen. We're already too far down the funnel. And so we already see that at end of financial year, dwell times diminish and obviously gross profits diminish because we're trying to move stock anyway. But the same just in a normal selling cycle. If somebody comes in and they say, I'm interested in a vehicle, and we just cut straight to price, we're not spending a lot of time with them, we're not building rapport, we're not following our road to a sale that we all get trained on. And at the end of the day, low dwell time is just going to drop our rate down. And I mean, Mark, one of the businesses you and I were across before, I remember speaking to a general manager about that, and he looked at his dwell time and he said, there's no way I can sell our vehicle at full gross profit spending that amount of time with a customer. And I left. I said, I don't need to talk to you anymore. Thanks very much. Let me know if you need a hand. He was like, that's just not possible in that time.
Now, it's interesting you say that, Brett, because when we talk to owners of businesses or GMs about that, if they want to be protective of their teams, their consultants, etc., they may have the opinion that they're doing a great job or that dwell time is what it is and it's the marketing team's not getting enough people coming in and that's the problem. Having the data to speak with and then looking at that trend over time, you've got one example there of a GM that had that, well, hang on, is that what my dwell time is? How often do you find that there is a disbelief until they see the data? If you were to tell them people aren't spending enough time in the showrooms.
Yeah, quite a lot. And I mean, I think, one of the things of having a look at, and some of the earlier podcasts, did with Philip Mance, I think, when he was talking about, what was going on in his business. And I remember there was a discussion about what was the biggest disruptor that's happened to the business industry. And he was talking about F&I, with the finance rates have changed. And there was a perfect example where, a lot of dealers, and we did the same, but a lot of dealers where that was basically where the money was. The car was basically just the inventory used to actually get the finance rate through to make their money. And so really it was about, well, I'm happy to make a small amount, be it holdback or X or whatever it is on the vehicle, because I know I'm going to pick most of it up in the F&I. It's now changed. And so some of the discussions we're now having with a lot of dealers is around sort of saying, well, hang on, I can't rely on that anymore. And the other thing is the perception of the gross profit they've been making, they think that's what it is. Actually, it's like, look, stop pre-qualifying. Stop assuming that every buyer has cross-shopped you, because that's not the case. Stop assuming that the dealer down the road is always going to rip you on price, because that's not the case. A lot of customers these days want good customer service. And if you give them a good engagement time and you speak to them in the way they want to be spoken to, the way you'd expect to be, they will at least give you a second opportunity if it comes to it. We've seen it time and time again. So it's about a bit of a management change and a mindset change of sort of saying, really, customers just want to be spoken to like they wish. They don't want to be given a pre-qualification. We need to spend the time with them and the gross profit will follow. We've seen it time and time again.
So, Brett, from your side, what do you think are the 2 or 3 key metrics that the dealer should focus on?
Yeah, so look, I think as we mentioned, certainly the walk-in traffic obviously is always one. So whilst a lot of dealers, monitor their own walk-in traffic, and certainly some very good operators will know theirs without a doubt, but you really should look and say, what is the increase that we had? Actually, what's the percentage shifts we're seeing week on week? What do those trend lines look like? How does that go? And then after that, it's how much time did we spend with them on a daily basis? And it really gives you, the comments. Those sort of things we were discussing about where we're seeing the lower dwell time and the higher bounce rates or missed opportunities at the end of the month. We still are in a market where we sell for 25 days and deliver for 5. We're trying to break it, but we won't. And it's interesting that buyers have been educated that I should get a good deal coming in at the end of the month. But there's a disparity because our sales team are delivering stock and we've taught our buyers to come in those last 5 days. And so there's nobody there to serve them. Dwell time goes down, bounce rates go up, and that's when we have a problem.
And as far as best practice, what do the good operators, whether they be dealers or retailers, do? What is best practice when using your tools?
Yeah, so for some of the OEMs that we work with, they sit down in their weekly BDMs or ASMs or whatever your regional teams you call them for your sales guys on the ground, and they will pick the 5 bottom dwell time dealers for that particular week. They will then engage on their next dealer visit and discuss how to increase the dwell time, because they've seen enough data now to understand that we may not be able to say, get more people in tomorrow. This takes a bit of time to do that. But what we really can try and do is say, let's work together, not as a stick, but as a carrot. Let's work together. How do we get that dwell time increased to A, sell more cars, and B, make more gross? So that's really the big one. From a dealer perspective, where we're finding the big ones for that is that there's some from a marketing perspective, really look at that outside to inside traffic conversion, especially with the local area marketing. What do we do? And remembering that, with the inside traffic, we have average trend lines of everybody else in your zone or your brand. So, if you've got 100 showrooms, the columns show you your traffic, the trend line shows you the other 99 as an average. So you can say from a marketing perspective, the dealer will use it and say, I did some local area marketing and I can see it helped me, and nobody else really had a big spike. So, that's fantastic. And then the general manager and the dealer principals, they're really using it to say, hey guys, this is how many people we had in. I want to discuss where we went through with them. Now, understanding that Blix might have picked up slightly more than what we've reported, and that's fine. I'm not here to say where's the extra one person. I'm more interested to know we had an increase. Where is it in the CRM? If not, did we get to a deal? Or show me the people. Let's discuss what it is. If as a management team we need to get involved, let's try. If they can use Blix to help them sell one extra car, it more than pays for itself. And so really it's just about finding that extra engagement, the extra person. Help me understand, where were these people that came into our showroom? What opportunities did we miss? And get onto it fast, because remember, we know they're gone in 5 days. So it's look what happened yesterday and try and act quickly.
Brett, are you able to tell the effectiveness of a marketing campaign? Because if you can take the trend of the industry off and then you can compare the traffic coming into the dealership, is that fairly accurate on how effective your campaign is?
Yeah, 100%. And as I said, because we're not just measuring what happens inside your building or showroom or space, we're measuring outside as well. So, as I said, it's one of those ones. And coming into certain times of the year where everybody has a campaign on and you get the increase in traffic, actually some OEMs, some brands, some dealers may not need to spend the money because everybody else is, and the traffic's coming anyway. And so you can sort of look at it and say, let's be a little bit more creative on where we spend it and on what we spend it, because everybody's doing it. I'll give you a perfect example. We work sometimes with dealer groups that own a strip. They'll have 4, 5, 6 dealers in a row, and they've been able to ascertain over time that they are better to spend all the marketing dollars on one brand, because the customers funnel through that brand and then move across their showrooms left and right. And so instead of spending multiples everywhere and potentially spending $100,000, they can spend 50 targeted on this and then work on making sure that the sales team are able to cross-sell and move those customers across based on what their needs and reactions are.
So who should be looking at, I'm keen to get your advice as to the users of the system. So if you were to summarize, who should be looking at the data that you provide?
So from an OEM level, obviously, we certainly see C-suite having a look at it and sort of discussing it. They probably discuss it weekly or monthly about, the overarching trends of that. And that can also help them go back to their head offices, wherever it's going to be, with allocations coming and different bits and pieces. But really the key users that we find in the regions is the director of sales or the head of sales and the area sales managers. And that's because they're the link between the manufacturer and the dealer at the coalface. They're really that link of having a look at it. And, for them, it's really about saying, okay, I'm going to see these 3 dealers today. Let me have a look what's happened to them. I'm not just going to go in now and talk about my standard allocation, marketing spend. What are you doing here? What are you doing in this level? We discussed this on your plan. It's more about saying, hey, we've noticed your amount of traffic is decreasing more than others. Let's have a chat about that. We've noticed about your returning visitors is going down. Let's talk about that. Or your dwell time's going up or down. Let's have a chat about that. So it just gives more about, instead of just going and talking about what the OEM wants to see and report on, it's more about saying, let's have a discussion of how to sell more cars. What we're all here for at the end of the day is how to sell more cars. And obviously from head office, marketing, definitely marketing, because some of these companies have got decent marketing budgets. But what's happened, before COVID, as we know, the auto industry had a couple of very tough years in Australia. And a lot of marketers within OEMs have been told, yes, you can have your budget, but I want a KPI on every dollar. I want to see it. I want to know what's happened. I want to see the outcome of what you did. Don't just spend $100,000. If it's going to drive incremental traffic and sell more cars, great. I want it measured. And so now they're not relying on somebody else to give them a number who has an avid interest to say, I want more spent. It's actually about saying, well, we did drive the traffic. It's just that we saw it more in that area or more in this area. So for marketing, that's for them. When you get to the dealer, certainly the three main ones, dealer principal, general manager, sales manager, for sure. And each of those within that environment have a little bit of a different interest. The sales manager, where possible, and we try to talk to a lot of them. I've been to a lot of sales managers trainings and conferences and sort of said, guys and girls, you need to be using this data to help you sell more cars, to look at your team and say, guys, our dwell time's gone up. Have we seen the correlation? We should be. Let's follow them. Hey guys, our returning traffic's gone up or it's going down. Let's follow them up. It really is. It's not about a stick. We don't want a sales manager to sit there and say, oh, I'm now being monitored. That's not the point. At the end of the day, wholesale sales will tell you that anyway from a monitoring perspective. It's about where I am missing that opportunity. The dealer principal, a lot of days now, dealer principals, while they do spend time on the showroom floor, a lot of them are very busy doing high-level stuff, or they're a dealer principal of multiple showrooms, and they may not be on those showrooms every day. And so this gives them the ability to look at it and go, I wasn't here yesterday. We had 10 people walk in. How do we go? Let's have a discussion about it. Or I've had to trim my staff down because of the current environment. We're now reopening. Wow, I didn't realize I'm starting to see this influx, and actually be able to measure and quantify what the influx is to say, I should put somebody else on as a head count. And then the GM is the stick between the middle. As we know, the GM, he or her is always the one that sort of goes to the DP, assists running the business, but also then manages the sales teams at the same time. So really driven on that way and really guided through those three main lines within the dealership.
So Brett, in terms of you provide all the data for the OEMs and dealers to look at, but what other services and support do you offer?
So from the Blix product perspective, we sort of have, Blix, as I said at the start, is not a software as a service. It's not a set and forget. We also have consultancy on it. So currently for OEMs, we're offering up weekly reporting for them. So back to our earlier conversations about what's everybody else doing. We do an aggregated average across the network of what's going on for Australia and also some of the other dealers and some of the other countries. So we look at that for their particular area. But then we also, as I said, we'll go and attend dealer council meetings, dealer principal meetings. We'll go and attend and have quarterly updates with the OEMs or the large dealer groups to sort of see what's going on. And then we also offer and assist in trying to link some data. We've been approached by quite a lot of the companies that run the websites, and they're interested to have a look at what goes on. And so these companies or the OEMs will also pull the data out of Blix to put on their own dealer portal as well. So they have a live track, of what's going on. The dealers then also get, or the users also get, a daily email sent out to them to say what happened in your business yesterday. And that has a trend line of 6 days. And then it says, okay, yesterday was Thursday. This was what happened yesterday based on your passing traffic, your inside traffic, your dwell time and missed opportunity or bounce rate. This is what that compared to last Thursday, and this is what compared to the average of the last 4 Thursdays. And they get that at 9:30 every morning. It comes and tells them exactly what it is. So they get that action. And there's also then a Blix app as well that can, activate. When we've spoken to a lot of dealers about it and just tried to ascertain, who uses what and what services we can get, most of them have it. It's open on the internet to any web browser. Most of them have it on as a tab on their page, and they just, periodically have a look at it throughout the day or a couple of days a week to sort of see how we're going and try and get in front of it as quick as possible.
Brett, what trends are you seeing in the industry? So we've had this COVID shock. We've seen the digital journey accelerated. Is there an increase in dwell time or a reduction in dwell time?
Yeah, great question. So look, overall, I'll give you some overarching numbers, and this is October versus October year on year. Now, keep in mind, obviously, that Victoria was in lockdown, although we certainly did see some manufacturers put plenty of sales through in October, which was also interesting. But traffic year on year is down just under 50%, okay, as a trend. Now, when you take Victoria out of that and you have a look at it, even when you look at the individual states, it's between 40 and 50% anyway for the states and territories. They're all within that sort of range, and that's understandable based on what it currently is. Dwell times dropped by about 2.5%. So, when you talk about 2.5% over a time, it's not dramatic, but we always like to think that we should have more time to spend with less customers. But as we all know, this is not exactly a normal trading cycle that we're working in, that anybody's in. And really, the interesting thing we see is that people are spending a little bit longer online in the digital space. They're trying to work out a little bit more what I want to do, perhaps making an extra phone call in the dealership, which is why, at the moment, phone inquiries is just as important as a walk-in. I mean, they always have been, but now even more so, before they make that decision to come in. But because we've done all that in front, I may not have as many questions I need to ask about my buying journey. So I sort of come in, I'm ready to go. And I think overall, the automotive industry and dealers have done a fantastic job of pivoting and making sure that, I have test drives ready that, unassisted test drives, off you go, please, fantastic. Not that issue of, are we spending too long together? No problems, let me help you. I think they've done a really great job of it. But traffic is down, as we know. Dwell times come off slightly, but conversion has increased quite substantially. There's a decent shift up in conversion, which is fantastic.
As far as cross-shopping as well, is that increased? Are you seeing that's happening as well, or is cross-shopping pretty much remained the same?
Cross-shopping's pretty much remained the same. And look, we see the same sort of things, across the industry as a whole. Cross-shopping in the first 3 weeks is not massive, and I'm talking 3 to 5% is all the cross-shopping you see across a network in the first 3 weeks. In the last 10 days of a month, particularly depending on the month and, what sort of options manufacturers and dealers are trying to put out in the market to get their share, that could go between sort of 5 and 9%. It very rarely goes to double digits anyway. It never really did, and it's not now either. It's the same. If anything, I'd say cross-shopping softened a little bit, more because I think just with COVID and people's concerns, by the time they go to a dealer, they know what they want. And that's why conversion's gone up, but it also just re-emphasises why a current walk-in is so important, because they're not there to play cards and have fun. They know what they're doing.
And Brett, in comparing automotive to other industries, are you seeing similar types of trends, or is automotive up or down compared to other industries?
Yeah, so look, it's quite interesting. So as far as a traffic volume goes, retail, and by retail I mean shopping centres, strip malls, standalone, your normal retail type store, they've seen a similar foot traffic decrease. Okay? It's actually very, very similar, one of those interesting ones. And dwell time, on the other hand, though, has dropped considerably more. It's up to 10% less, the dwell time in some of these. And we think that's more to do with the for most of the time, not everyone, but for most of the time, the retailers are in shopping centres. And so, it's not like I can pull up to my dealership out the front. There's probably a parking space for me. I may or may not be greeted quickly. I'm in and into my engagement straight away. With a shopping centre, I've got to park the car, find the door, walk in. I don't want to be around those people. So, divert around. There's quite a lot of different things that you may or may not do. But then dwell time has certainly come down. One of the biggest problems the retailers are having is that because their size of a store compared to, say, a dealership is so much smaller, they can't have as many people within the walls. And so you have this interesting problem at the moment of saying, do I have another staff member? But if I do that, I can't have potentially more customers coming in because I'm at maximum occupancy for COVID. And so it's an interesting sort of a juggle. But dwell time for retail is down, as I said, up anywhere up to 10%.
And what do you see as the changes in the short and medium term in the industry or in the market? So where do you see, from a trend perspective, are we going to have shorter dwell times for the foreseeable future, or is it likely to change?
I actually think probably for the foreseeable future, you'll see it relatively stable. And I think the reasons why, and at the start of the conversation, start of the podcast, we were talking about, David in the US suggesting that, it could be up to a 4-hour journey when by the time you do the whole lot, whether it's that long here or not, obviously we don't know, depending on, sales, after sales, whatever you're going to put in the journey. But the process of selling a vehicle and giving someone what they need to decide to put my hard-earned $30,000 down is still the same. If anything, it's become a little more tougher with some of the new laws and things you need to tick boxes of. There is still that process I have to go through from the paperwork side, the F&I side, the after sales, all these things still happen. And remembering, of course, that if I'm going to spend my $30,000, I want to make sure I'm comfortable before I sign anything. And so there is still that engagement. And that's why I believe the dealer model will stay, a dealer model of some stage will stay long term. But in the short term, I would imagine that dwell times will remain relatively stable as an average. We still see the dealers that do really good, operators that know what they're doing are still holding strong dwell times. And they could be 10 or 15 minutes stronger than everybody else. But when you talk to the OEMs, they consistently tell you they are our number one dealer. They do the best volume, they have the best structure, and they make good money. And it's because they spend and engage with the customers. I think looking at more of the medium to long term will be quite an interesting one. I know a lot of manufacturers are looking at dealers being agencies where it's just sort of delivered. They do it online and they purchase the vehicle and deliver it. I've known some people that actually gone through that process. The interesting feedback is they say the customer service was not great because the salespeople were not involved in the process. They didn't have an opportunity to build rapport. And because they're just a delivery agent, they're just seen as an assistant. They're not seen as someone that's helped taken me through this journey. I've built rapport and feel really comfortable doing that. And so, this issue where a lot of these brands like to look and say, what was my CSI score? What was the engagement score? Where do I sit as far as overall customer satisfaction on that initial journey? That's going to change because people don't like not having the interaction up early. They think it's going to go well, but it actually doesn't. I think we're probably going to see the model where Unfortunately, we may lose some smaller dealers, which I know has happened for the last couple of years. I think that trend we'll certainly see. But I think we're going to get to a point where those that are able to ensure they engage with customers properly and not sell them, but actually give them the customer service, that model's going to grow very, very well. And I always look at it and think of it, from a real estate perspective. We've all been to barbecues and where people whinge and say, I've never heard back from the real estate agent. He doesn't want my money. Well, the car business is a lot like, I think we've got better at it, but that's the way I've stepped forward, is that really it's about engaging with customers so they're comfortable. And this is why some of those fixed price models are working well in some countries, because the stress is off. I know what I'm going to pay for it. I just want to come and have a coffee, build rapport. And am I going to take a silver one or a white one? It changes the selling more to engagement. That's why that model is already proving to be successful.
So, Brett, there's been a fascinating talk today. I think you've got a tremendous product there, and just the transparency and openness in it is amazing. Maybe can you summarize in 2 or 3 sentences for any dealer or OEM watching the podcast, why would they buy your product? Can you maybe just do a quick summary for them of why they should buy your product?
Yeah, absolutely. Well, I think one for everybody to look at it, and it's always which side of the coin you want. But I think the best way to look at it is that, we always see is Blix gives an independent third-party view on foot traffic in dealers and by groups. And from an OEM, obviously they want to know that, because they're saying, whilst Mr. and Mrs. Dealer, I understand and appreciate that, but actually from a marketing perspective, we want to look at a whole and use the same measurement. I'm not asking to use a CRM, to use a count, it's the same. We're using the same system to measure that. So that's fantastic. From the dealer perspective, it's saying, I'm now not worried necessarily about what my sales team are and aren't reporting, or I didn't count that because that was a brochure, whatever. No. I want to see, as a business operator, how many people come in my showroom. That's important. So there certainly is that one. I think then the step after that from an OEM is more about then saying, when it comes time to where are we going to spend our money, where do we do vehicle allocations, something as simple as what sales training do we need to employ, where are we going to set that roster for? They can look at those engagement metrics and understand this is where we need to do it. And from the dealer's perspective, really quite simply, how do we sell more cars? At the end, that's what we're all here for. It's how do I sell more cars? Looking at when my traffic's coming, do I have enough people? Are they spending enough time with them? And if they're not, helps me understand what to do to push more metal. And really, that's what we're all about.
Yeah, thanks very much. It's been a really good discussion. Is there anything else you want to add at this time?
No, look, I think that's been great. Thank you so much. It's been fantastic being a part of it. I've got automotive in the blood like you do, I'm sure. So I always love having a conversation about it. But one thing I would certainly say we always like to think, and even in our Skyfii model, is that it's always just about a conversation. The business case of what it's not necessarily about what the tech will or won't do for your individual business. It's just the conversation of, let's talk about it, let's discuss it. It may or may not work for you, but let's have a conversation to understand what's going on in the market and see if we can make some improvements to help sell more cars.
Well, I've got 2 pages. I can't show them here, but 2 pages of notes. And thanks, Brett, for coming on the show. I always enjoy your discussions. Your presentations are fantastic. I encourage anyone who's using your system to use it even better, because I know that there is so much value in using your system, and it's never ending as far as the gems that you can pull out of it. And just to summarise, and I'm keen to get your feedback if I got this right. So when we look at Skyfii, I was amazed. I did not know Skyfii was a publicly listed Australian company. So that's great news and good on you. And it's great. I'm proud as an Australian that we have such technology here and such an innovative business. And integrating Blix into that, with your specialty in the retail and the foot traffic, but that whole data intelligence and tracking the customer behaviour and impart insights is so critical with what you do. And it's using those smart devices that don't gather or collect any personal data, so there are no privacy issues associated with it. But even just when you look at the walk-ins and the passing traffic and the trends, and it's all about trends, having these pegs in the sand that you go, right, what's the trend with that from that peg? And this is the peg for walk by. Is it improving or is it not? Are the walk-ins improving or are they not? And that's the accountability of the marketing, whether it be dealer marketing or the OEM marketing, they own that. And it's in strong, good data to justify the spend. And it's a good mechanism to use to justify and say, well, hey, this is what we're achieving or what we're not achieving. It helps that accountability. Because one thing in your summary that I think the 3 points you made were really powerful was that you're an independent third party. which provides a view of foot traffic. There are plenty of digital metrics out there for what's happening in the upper funnel, but you are an independent third party. Like, it's the sort of stuff we need you for the US election to really validate what's actually going on and whether there are fake news or not. There's no fake news with your business.
Yeah, that's right.
Right? And you're using the same measure for every site and same process. So none of this, but I'm a bit different to this guy. No, it's the same measure. It's phones coming in and out, and we all live with our phones. We are attached to our phones. Jerry Seinfeld has a great skit on that, how we're he thinks that the phone dominates us and we're the device to move it around, but you're measuring those phones. It gives you the opportunity for business processes and efficiency, and you're measuring what it is. The secondary part, which is the dwell time. So walk by and walk-ins are marketing, but then the sales operations is the dwell time, the bounce rates, the cross-shopping. These are the behaviours that the sales force have direct impact. And this is where your coaching opportunity is presented, that you can find out where the leakage is, where the conversion rates are better or worse, and what are the trends over time? Because that's the critical piece. That's pegged once again, trend over time. Am I cutting corners? Am I getting lazy with my road to the sale? And I'm going straight to price, and then my bounce rates are increasing and my dwell time's reducing. These are critical measures that I can then coach my team and say, right, guys, this is what we're seeing. And or are we way run off our feet because suddenly there's been a spike, we've come out of lockdown, I need more people, or I need to be more structured in my appointments. And this is how I can use your data to help manage how I go about things. And I really liked your point about the deliveries. We sell all through the month, but we deliver at the end of the month. So let's get some management and some planning around. Let's get some deliveries earlier, get them out of the way, or even structure it that we get someone else to do the delivery so that we can really focus on those dwell times and maximize those without going too far. So ultimately, your tool and your business is going to help me sell cars, because that's the fundamental of it. So whether I'm the owner, whether I'm the consultant, whether I'm the GM, it's going to help me sell cars because I've got an independent source that's telling me what's going on, what are the behaviours down the bottom end of this funnel. And it takes all the conjecture out of it. And I can then speak with that data and say, right, I've either got a people problem or I've got a input problem. And then what is it? Do I manage the person, or can I train the person, or do I need to do something else? Or do I have a problem with parking where people have got lots of walk past traffic, but suddenly there's some roadworks at the front and I'm not getting the walk-ins? Oh, what is my action plan around that? So there are many ways that you can use your data to then make critical decisions that are going to help A, your profitability, and B, your customer experience. So have I missed anything?
No, perfect. I think, an interesting one. I remember somebody came to us once many years ago and said, when they were looking at sort of some of this Blick stuff, and they said, it's really interesting. You can't action what you don't measure. And so, when you really look at that and you sort of think, one of the things we sort of talk a lot about in the retail space and in this space is that, would you ever run a website without Adobe or Google Analytics on your website? And they'd be like, no, that's ridiculous. Why would I ever do that? Okay, how much did you spend on your website? 5,000. How much did you spend on your dealership? And you don't have any way of automatically measuring what's going on. And same with retailers. It's exactly the same. Some of them don't have foot traffic, and that's alarming. They go, that's a really good point. The only thing for me to sort of stitch it all together too is that sometimes for Blicks, whilst the showroom or a dealership has walls, which is fantastic to us, that's just to make sure we set it that way. But, where this all stitches really nicely together, and we've done this with most OEMs and dealer groups, is that, when you spend an obscene amount of money displaying product at a show, a shopping centre, some form of pop-up display, you put one of these sensors under the car and you measure how many people went from the display back to your dealership. And so it's giving that ROI to everything we're doing. I'm pushing people into the showrooms to say, well, what's the ROI? I'm running this campaign. What's the ROI? I'm running this at a centre or a pop-up. What's the ROI? And then measuring those sales conversions. We're now working on, one of the new releases we're working on at the moment is ingesting actual sales data and giving physical sales conversions on foot traffic. So, and then comparing that to monthly targets. Taking that funnel even further, like you're saying, Mark, we're now going all the way down to actual closing of the sale and the sales conversion. So, watch this space. It's certainly an agile market that we're moving in.
Brett, in terms of those shopping centre displays or pop-up stores and that, what's the average time it takes for a customer to come back to the dealership? Have you got, say, it's between 1 and 8 months, or Do you have any figures on that?
Yeah, look, it's generally in the higher end for sure. One of the things we look at too is, working in a lot of these spaces obviously generally cost quite a bit of money to put them in, $10,000, something, they're quite expensive. What we do is that when we ingest the data of those unique devices that have visited those displays or pop-ups, we store them in the server and then they sit. And so whilst they're always stored in those server, the probes, we wait until they come back. Generally, we're finding, just because I want to run my car at a display this weekend, doesn't mean somebody's in the market this weekend. I might jog their interest to say, oh, that's interesting. In 6 months when we change the car, we really should have a look at brand X or dealership Y, that sort of thing. But generally, we'll look at it over 6 months. After about 6 months, it sort of peters out, but you get an immediate impact of the people in the first month, then it sort of quietens off, and then month 4, 5, 6 is when you start seeing more of a stronger response come through.
Yeah, it's quite interesting for me because I worked in Europe for one of the tier 1 brands, and this was 15 years ago. And to us, this data was really important, but the technology wasn't available. And I remember we set up counters on all the dealership doors and we're measuring the counters. And then I think in the top 15 or 20 dealers, we set up video cameras and we had our quality guys monitoring the video camera and drawing up manual heat maps of the customers in the showroom and where they went to that. So, it's so important. It gives you so much information that you can use.
Well, one of the main reasons that this product works so well in a dealership is that, in your retail store where you have one door, you can put, and our Skyfii business, we work in this space quite strongly, you can put a thermal people counter camera in that is, 97, 98% accurate, highly accurate. The technology is amazing what they do with this stuff. It's amazing. But a dealership doesn't have that. Most dealerships, especially the Autobarn ones, have 20-foot ceilings where you can't put cameras up that high. It doesn't work. And I have a sales door, a service door, a delivery door, the stairs up from my parking underground. There's just too many places I can gain and lose where it's not going to work. You're not going to have, those numbers. You're not going to be able to catch the people. But, once again, this shopping centre or pop-up activation, this type of area we're moving, and we've worked with most manufacturers in those spaces, it's using the same technology as you do in the showroom. So once again, it's the same view again and again. You're using that same level and really strong, because we've had instances where some dealers in Melbourne have used it, spent a lot of money, and then actually found out that they drove more incremental traffic to their competitive dealer down the road because, it just happened that people, they didn't know that people would just come from that area for shopping. So, but they could quantify.
But no, really, thanks, Brett. It's been, as always, mate. I'm a massive fan of your product and how you go about it, because the best part about it is you actually use the data and turn it into English to then make it operationally logical, and you get so many aha moments when you sit down with the OEM or with the dealer group. It blows so many people away, because we're immersed in so much data. There is always if the data doesn't suit what I want to hear, I dismiss it, because if someone's telling me that, well, that's just their opinion and it's not accurate. Whereas your data is an independent you're the scrutineer at the electoral process, saying, well, no, that's exactly, that vote came in and it said this, and they voted with their feet and they walked out. They didn't stay long. Whereas I may say, no, my team are fantastic and we don't let anybody walk. You'll have data that contradicts that. So it's just such powerful information.
Yeah, and look, for me, to finish it on for sure, is that the last thing our company ever wants, and certainly me as an individual, the last thing we ever want, and I say this to a lot of OEMs and dealers and retailers all the same, is that we don't want anybody to spend any more time in front of a screen than they have to. Because whilst you're doing that, you're not selling units, you're not selling cars, you're not selling dresses, you're not selling watches, whatever your product is. This is not designed to get you to spend more time in front of a screen. As a matter of fact, it's quite the opposite. It's designed to look at the email in the morning. Did we perform yesterday? No. Great. Now I'm going to go log in and have a look at it and go, why not? Where can I fix it? Did we perform well yesterday? Yes, we did. Was dwell time good? Yes, we did. Fantastic job, guys. Let's go on with it and do it again today. It doesn't need to be any more difficult than that. I think, people will get paralyzed with too much data and too much information. And for Blix and Skyfii, it's about ingesting that and turning it into actionable insights to say, really simply, guys, do this, and that'll help you get the outcome.
John, it's interesting if you join the pieces of this mosaic that is the auto industry ecosystem. We think of Steve's presentation on absolute results, Steve's and Logie, and their goal is about appointments. Just get the appointments, get the appointments, get the appointments. Then the piece that fits perfectly next to that is because they can tell how good a sale event they're going to have if they have X amount of appointments. So it's like get 15 appointments per sales consultant and you'll sell between 5 and 7 cars, which is fantastic. So get the appointment, but then use the Blix data and say, right, once I've got those appointments, that's that metric I'm just looking for. Next metric is I'm looking for 5 minutes minimum dwell time. So, and then the other inquiry is from the ecosystem is the inquiry that comes in off my new car listing is respond to that within 5 minutes and I'll then have a conversation. But then when it gets down to in my showroom, I've got to make sure I use my Blix data and really focus on, am I spending 5 minutes? So you'd almost want to have a stopwatch with each consultant and go, right, when they start the conversation, I've got to make it at least to 5 minutes. Otherwise, I'm wasting my time here and I'm not doing my job.
Yeah, so Mark, actually, I've got a bit of a funny story to analogy. I mean, obviously, with a system like this, you don't need the stopwatch to measure because obviously it's going to time them as an average for you. But I'll give you a funny example. We have a dealer principal who was very engaged with us, and they had to go to a product launch of a new vehicle, and were going to be away for most of the week. They were taking their wife with them to have a holiday at the same time as pre-COVID as we used to be able to do. And he was worried, understanding that missed opportunity or bounce rate of 5 minutes and dwell time was so important to the results they were getting that he actually said to his sales team, all right, for the next week, if you can get missed opportunities or bounce rate, which is those leaving in 5 minutes, if you can get that to 0 for the full week, I'll take you and your partners out to a very big dinner at a flashy restaurant, with lots of lovely wines and good things, completely expecting they'd never get there. So off he went. Came back, I got a phone call from him on the Monday morning asking, can you verify my data? I said, sure. I said, wow, what a week. He goes, he was in a panic. I need you to verify it. I said, no, it's right. I said, it's on. The data's captured. That's what it is. He said to me, oh, geez. I said, what happened? And he said, well, I told the guys that if they don't let anybody leave under 5 minutes and engage them while I take them out to dinner. He goes, now, I expected being a showroom, you might have a truck driver come in and drop something off. Well, they're not, there's always going to be some people that drop out because they're not, that's not the inquiry you're looking for. Somebody's dropping something. You always have something. That's why it's the trend, over and above. What these smart guys did to make sure they got it was they offered the truck drivers and postal and courier people a cup of coffee and a biscuit to ensure they stayed longer than 5 minutes. Quite smart the way they did it. Cost him a fortune. But anyway, it was it's quite an interesting way of using it.
Brett, thanks very much. I think you've got a fantastic product and I think you're going to do extremely well. So thanks very much for sharing your information today. It's been really great.
No, thanks, Sean. Mark. Been great to be part of it and watching the podcast for a while. And, it's always interesting and appreciate you guys bringing a more of a direct operational approach to the industry, which is great. We always look at what new cars are being launched and information, but to actually dive deeper into some of these issues that are not necessarily out there in the market for everyone to see, I think it's fantastic. So happy to be a part of it. Thank you.
Thanks, Brett. Really, really appreciate it. It's amazing stuff. I loved it when I was at FCA. It just opened up your eyes. And it actually helps the sales team versus marketing team fight.
Definitely. There's no argument. You can't argue.
So it's an independent third party verifying what's the trend in the showrooms. And it was so powerful because we used to work on a metric of 40% of walk-ins buy cars. So if your offer is right and your product is not new, it's when say you're not launching an all new model that no one knows about and they're still early in the pipeline. But if you're consistently operating like you're selling Navaras and everyone knows what a Navara is, but you might have enhanced it in some way, but they still know a Navara. So the flow is consistent. And you could see over a period of a month that it was how close to 40% were the B-backs, because they were the people coming back to take delivery of their vehicle. And if it was like 38 or 35, 40, sometimes it would be at 28. And you think, well, hang on, 28, what's happened here? But then that's where your behaviour is you got to follow up more because those people haven't come back. Now, that might also be that your supply chain is that you've got forward orders. And that's the next debate over, well, hang on, you took this many orders, why haven't you got this many sales? It's like, well, because the supply chain is that they're on boats. They're not here yet. So they should then be deliveries next month, but then they won't. There'll be orders taken next month that won't be able to be delivered till the following month. So then you look at what your carryovers are, and then it's this whole juggling effect. But when you are dealing with a OEM where they say, and they're used to having a factory in their backyard where they build a car, they ship it to you, dealer, you sell it and deliver it same month, it should be wholesales equal orders equal retails. That doesn't always happen because the orders and retails can have carryovers that were from previous months that get sold, or carryovers for future months. Therefore, the two vary. But it's that whole understanding of the data, but the Blick stuff really tells you what's going on in the showroom, which is the truth, the source of truth. Thanks for listening today. Hopefully you got as much out of today's discussion with Brett as we did. Brett's got some amazing tools that can help OEMs and any retailer in improving their sales efficiencies. So some really good stuff there. If you need any more information on what Brett covered or any other automotive-related topic, please reach out to either myself, Mark Pallavestra, or John Sinclair on LinkedIn. Leave us a comment here on YouTube or on, once again, on LinkedIn. And also subscribe with the button below so you get updates with subsequent shows. We've got some fantastic shows in the pipeline with some very interesting and diverse guests. And if you want to discuss any sponsorship or any other activities or any consulting work with us, please once again reach out to us via LinkedIn.
Thanks everybody for listening. We'll speak to you soon.